Welcome to Social Studies, 7th and 8th grade today. We're going to talk about the global economy, 1015 in your book. Please open your book and follow along today as we talk about what's happened in our world in the last 20 to 30 years or so. Today we're going to talk about the 1990s through the early 2000s. So this is kind of fun for me to talk about because that's when I was a kid and grew into a teenager and a young adult during those years. So it's kind of fun to talk about all these years and think about the things that I experienced in them. So we're going to talk about the idea of globalization today. Globalization is this idea that the spread of a global economy. Prior to the 1990s and 2000s, certainly countries traded with each other, but there was inventions in this time called, especially things like the internet, where countries could start to more easily trade amongst themselves and where you could get information or products from anywhere around the world really quickly because of inventions like the internet and cell phones and things like that. That our world became this global economy instead of just Americans buying all American things. A lot of the stuff we would buy in our own country could come from other countries, and we would sell our stuff to other countries. That began to happen more and more in the 1990s and early 2000s. And it had its good sides and its downsides. Some of the good sides, businesses in our country benefited from lower production costs. In other words, it was cheaper to get materials from other countries than sometimes to make it in our own country. For instance, like oil. Oil is not real prevalent in the United States. It's cheaper for us to get it from countries like Saudi Arabia that have a lot of it, right? So that was a good thing. It gave us new markets to trade to, right? We could sell our products to countries all over the world instead of just Americans. And it helped lower prices because, if you can buy a t-shirt like this picture from China, often is a lot cheaper than one made in the United States. That was a good thing. But it had its downsides too. And we'll talk about some of the downsides in this section that came from us depending on other nations a lot too for things that we buy and sell. The United States economy, how well people were doing and how well our businesses were doing, really grew a lot in the 1990s. And one of the reasons for that was when the internet really started to become more popular and people began to use it in their homes more often. I still remember when I was a kid, my dad getting a computer with the internet for the first time. It was super, super slow. It took forever to get on the internet. You had to use the same phone jack that your phones in your houses were connected to. So if you were on the internet, no one could call you. I don't know if I can overstate just how amazing the internet was when it first became popular, like when I was a kid in the 1990s. It was amazing that you could just turn on a computer and get information from anywhere in the world and find out sports scores. I remember just being in awe of that. I think we take it for granted now. You guys have had it your whole lives and everything, and it's just a normal thing, but that was huge. And in the 1990s, that was an amazingly huge thing. And so internet companies took off because the internet was super popular. It was this new and neat idea, and everybody wanted to be part of that and have the internet in their home. And so these companies, internet companies, which were given the nickname .coms, right? Because we go to websites at something.com, right? That were founded, just took off and their popularity went crazy. Things like AOL, maybe you even know some of these older companies, AOL, MySpace, all sites and companies that really have kind of crashed. Sites like that became really popular and they began to sell stocks in their company. So if a company wants to expand really quickly, it can sell off parts of its company as stocks, right? If you buy stocks in a company, what you're really doing is you own a little tiny bit of that company. And if that company does really, really well, you make more money and you can sell the stock for more money. So people were really pumped about these websites and the new idea of the internet. And so people actually began to pay more for stocks than they were truly worth. Companies like AOL were exploding and people were signing up for internet service through AOL. And that was a pretty famous web page too at one point. And so they sold their stocks for a lot of money. It's like when someone's really excited about something, they might pay more for it than it's really worth. Like right now, during the coronavirus, did you know that Nintendo Switches are sold out at almost every store? It's because so many people are stuck at home. They're looking for something to do and they want to do some video gaming. So actually on eBay and sites on the internet like that, they're selling for sometimes double of what they're actually worth. People are paying more for them than they're worth because they're excited to get one and they want one now, right? But the problem is those people were paying more than those companies were worth for the stocks. And what people began to realize is that it's hard to make money through websites. You can sell advertisements and things, but MySpace is a site that's very similar to Facebook nowadays. And lots and millions of people signed up. And so people thought, wow, this is a great business. Let's buy some stock in it. But they had trouble figuring out ways to make money. I mean, what can you really charge people, if you're just putting their photos on the website and stuff, and they tried to think of ideas and they crashed and fell apart and suffered a lot of losses. And so these stocks that people got really excited to buy, the bubble burst. It's called a bubble. A bubble grows bigger than it pops, right? All of a sudden we had this .com bubble burst, and you can see, in the early 2000s, all of a sudden the value of many of these websites just crashed when people realized they were paying more for them than what they were worth. And so the economy really suffered. One thing that also contributed to that was the September 11th, 2001 attacks, right? Once those happen, anytime there's a big attack or a big war or a coronavirus like we're going through right now, the stock market typically declines and goes way down because people are buying less things, or they're concerned what's going to happen in the country. Can these companies continue? And so we're kind of going through that right now. There's been a bit of a stock market crash, and people are hopeful that once this coronavirus is gone, that recovers a little bit. But probably if you own stocks right now, you've lost a little bit of money the last couple of months. Okay? And so the United States really suffered then in the early 2000s as the economy burst, because a lot of these websites really failed or didn't earn a lot of money. And that bubble that burst, people had paid too much money, and so they lost a lot of their investment. So here's a quick just overview of some of that I just talked about. The internet began to increase in numbers. Mid-1990s is really a time when many Americans got on the internet for the first time. Some of those companies are still around today, like Amazon, eBay. Those were started in the mid to early 1990s, okay? And they did okay. But others really burst after a while. But at first, the founders became really rich, but when people realized that they were paying too much for these companies, there was a bubble burst, right? And so PCs and computers were becoming more and more popular to own in your home in the early 90s too. So that was part of the reason for all the excitement before the big burst of value in those stocks. Okay, this is another problem that our country struggled with in the early 2000s that really led to our economy struggling as well, and that's the problem of fraud. Fraud is when you are tricking people out of your money or lying about money in order to earn more money. And so that began to happen with some big companies in our nation. There were companies like Enron is probably the most well-known one in 2001. It was a Houston company that sold energy to people. They were Enron Energy. And they sold stock in their company, but they lied. When they were supposed to report, companies are supposed to report every year how much money they make and how much they lose. They hid the fact that they were losing lots and lots of money. And they only reported their profits, the money that they were making. And so people thought that Enron was a really good stock to buy. And it looked like their company was worth billions of dollars. And so their stock went up and up and up. But then someone in their company alerted the authorities that there was some lying going on, and they were tricking the public and not really reporting that they were having lots and lots of losses. And so their stock crashed overnight once that word got out. And many, many people lost a lot of money that they had invested in this company. And so that was a pretty widespread problem in the early 2000s, not just with Enron, but other companies too. And that was something our government and our nation really had to deal with. If you look at page 1017 in your book, it also talks about how trade increased in the whole world, and especially our part of the globe in the early 2000s and late 1990s. We had NAFTA, that's the North American Free Trade Agreement. We've looked at that before between Mexico and Canada and the United States to let more trade go between our organizations. The World Trade Organization, WTO, that's the World Trade Center, those buildings that were knocked over in 2001 by that terrorist attack, are groups of nations banding together to do trade. And there are other ones that were put together too. You can see the CAFTA, the CAFTA, which is the Central America Free Trade Agreement. So we began to trade more and more with other nations around the world. And that had its upsides and its downsides. The upsides, we could sell more goods, right? We didn't just have to sell to our own Americans, but companies in our nation could sell more goods to people all over the world. We had more goods coming in, so you had more choices. Cars, like BMW is a German car company, so instead of just having to buy American cars like Ford cars, now we can buy BMW cars too. So that was a good thing for many people, is that they had more choices. But there were some downsides too, some downsides to this idea that we're now trading and buying and selling all over the world our products. Some of the downsides to this is worker pay was lower. One of the reasons for that is that in some nations like China, they don't have good minimum wage laws like we do. So in our country, there's a minimum wage law in each state. It depends on the state. I don't remember what Minnesota's is. Let's just say it's $15. And so for an adult worker, you cannot pay your workers less than $15. And so if you're a t-shirt company wanting to make t-shirts, you have to pay all your workers that much, which is going to make your t-shirts more expensive because you got to make some money, right? In China, they don't have such laws, so they could pay their workers $2 an hour and make really cheap t-shirts and then ship them to America and sell their t-shirts for a lot less. So if you have your American t-shirt company and you have to pay your workers $15, your t-shirts are going to be more than the Chinese ones, which means people will probably buy the Chinese ones. And so you're going to have to pay your workers less or cut workers just to make your t-shirts, be able to compete with those Chinese ones. You see, that's how worker pay can get lower. And regulations were weaker. Okay, in other words, the way we can control what's going on and making sure that these goods are being made legally and that people aren't being taken advantage of is harder when you're dealing with the whole world. For instance, there's these things called sweatshops in many countries, especially in Africa and South America, where people are basically slave laborers. They get paid literally cents per hour to sew t-shirts or to make products, and then those products are sold in countries like America for a huge profit. And that's wrong, and that shouldn't happen, but it was harder to keep track of that kind of thing when you're trading with many different countries. So there are some upsides, definitely, to having a global trade, but there are some downsides too. If you flip to page 1018, they mention a couple more. Some downsides, some companies moved overseas. Again, if you don't have to pay your workers as much in China and you're a factory, why would you keep your factory in America? Why wouldn't you move it over to China where you could pay your workers less and then make more of a profit, right? Some companies felt that way. And so some of the bigger companies from our nation moved to other nations to get around some of those minimum wage laws. It makes sense, right? One other upside 1018 mentions is more trade partners. Right? If there's more countries that we can trade with, you can sell more goods, right? So there are good sides and downsides to a global economy or global trade, and that's something that the United States is going to have to wrestle with, not only back then, but now. How do we best trade with other countries? You're going to hear about these things. I'll put this word here right now in all caps so it stands out. A tariff. A tariff is like an extra tax that our country sometimes decides to charge other nations when they bring things into our country. For instance, many of the products from China get charged a tariff because in China, obviously, it's easier and cheaper to make things. So if Chinese t-shirts get shipped over here, our American t-shirt companies are going to have a hard time competing, right? Because their t-shirts will be worth more or will cost more, right? Because we have to pay our workers more. And so to fight against that, our country can pass tariffs, which means that every Chinese shirt that comes in, we charge them a fee of $2. That's called a tariff. That means that they're going to have to charge $2 more for their t-shirts to make a profit. And then our t-shirts are pretty similar in price in the store, right? And so things like that are going to become something that our country has to wrestle with because there are definitely some downsides to trading and buying and selling all over the world. But you guys are growing up in a world that is so connected. It wasn't even that way when I was a kid. And that's why learning other languages, like Spanish, like we had been learning up until just, I know, recently when we lost Pastor Nass, but in high school you'll get to do that. And learning to use the computer and communicate and make presentations and slideshows and write clearly are super important skills for future jobs, because chances are the company you work for or someday your future job, you'll probably be dealing with people from all over the world. And to learn to communicate with them and communicate clearly and to navigate all the different laws and rules of the different nations is going to be key skills someday for workers in all the different workplaces. And so that's the world you guys are growing up in, a very global world that's connected, where information can be shared at a moment's notice. You guys have gotten so used to that, maybe that's just so normal for you. But that's not normal all the time for everybody. When I was a kid, it wasn't quite that way. It was just getting started, especially the internet. All right, hopefully that makes sense. Have a good day. We'll pick up lesson 2 right there on Wednesday this week. Talk to you soon, guys.